All right, good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through our live mortgage rates, and then we are going to do a deep dive into HELOC Combo Loans. Definitely something interesting. I'm sure Jose's got some tricks up his sleeve to show us on how we can utilize HELOC Combo Loans. Go ahead and drop a comment there in the chat as you tune in. We definitely appreciate it. We're just waiting a moment here to go live on all the different platforms so we can get it started. All right, it looks like we're live here, so we'll go ahead and get it started. Go ahead and keep dropping comments there in the chat. We'll take the chat off the screen for now, but go ahead and keep dropping comments there. Drop any questions you have in the chat as well, and we'll go ahead and answer them after our deep dive here today. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president Nick Hershey and our sales manager Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every morning on this show at 11 a.m. Eastern is go through our actual live mortgage rates. Then we do a deep dive into a different loan topic. Today's topic is going to be HELOC combo loans. So Jose will explain the reason why we may want to use one of these type of loans and how we can do so. But before we do that, let's check out our live rates like we do every morning. So Nick, if you're ready, let's go ahead and pull up the rates and see what they're looking like today.
All right, so we will check out the rates for all of our different programs today. It is June 24th, just after 11 a.m. So we have all of our basic rates are live here. We'll set up a scenario that we can compare the APR across the programs. We'll set up a standard single family home, a $500,000 purchase price, $400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. And we'll use an estimated 760 credit score and an estimated 40% debt to income ratio. And once we get to the DSCR loans, we'll use a value of 1.5, which I'll explain when we get there. And if you'd like a full breakdown of all the fees that go into the APR here that we'll be looking at, an itemized loan estimate, please get with our team members. We have over 300 loan officers to help you out. Let me go ahead and share my screen here. And we'll see the rates for today. So first up, our most popular program, most people think of when they think of a standard loan, 30-year fixed conventional loan for a primary home. Today comes in at 6.49 rate, final APR 6.815, right about the same as it was last week, picking right back up where we were. And if for any reason our customer doesn't qualify for a standard conventional, typically we'll want to present an FHA option as well. FHA allows more leniency on credit issues, as well as a higher debt to income ratio. However, it does have required upfront and yearly mortgage insurance. But FHA today comes in at 5.625 and a final APR 6.606 with all of the fees included. So if our customer qualifies for both and is willing to have some MI charges, this actually could be a touch cheaper. And our customer that needs to use FHA, definitely very comparable here to conventional, as we can see side by side. Now moving on to our VA options. Definitely great options for our eligible vets and active service members. If you are eligible, the VA loan programs are amazing. Today coming in at 5.875 rate. Final APR 6.195 with a standard funding fee, which beats FHA and conventional by a long shot. Definitely a great benefit for our eligible vets there. And our final agency government option is a USDA option. So USDA only works for properties that are in USDA areas, typically the rural areas of the country. If our borrower and the property are eligible for USDA, these programs are pretty awesome. 5.75 rate, final APR 6.512 with all of the fees included. So if our customer's shopping in these areas, they'll typically be comparing to an FHA, which notice the USDA is a touch cheaper, and comparing that to a conventional as well, which again, the USDA comes out a touch cheaper as well. And that rounds out our agency government options. Typically, most banks or lenders, if our customer doesn't qualify for these standard 4 options, we'll have to deny that customer. That's where we love to present our 5,000 additional options, starting here with our 30-year fixed non-QM alt doc option for a primary home. So if our borrower for some reason doesn't qualify for conventional or FHA, needs to use alternative docs such as bank statements, 1099s, P&L statements, all kinds of different options that we have, they can use this program. Rates as low as 6.999, final APR 7.344. So notice when we compare to conventionals, within about a half a point, which is typical, to use alternate docs. These lowest rate options are typically bank statements or similar. And moving on to our investment property options. So our non-QM alt doc option, same thing, a bank statement or similar for an investment property. Rates come in today, 7.375, final APR 7.867, which we will then compare to our other investment options. Remember, the government programs do not work for investments, so no USDA, FHA, or VA options, but we do have our agency conventional options. So 30-year fixed conventional for an investment property comes in today, 7.375 rate. Final APR 7.740, so a touch cheaper than our all doc option. So great option there for our borrowers looking to still use conventional, but we always recommend for our investors to check out our DSCR programs, our favorite programs. DSCR stands for debt service coverage ratio, no income, no employment needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. The estimated rents can cover the expenses, aka the property cash flows. That's a ratio of 1. As I mentioned before, for these demos, we used a ratio of 1.5 so that we could see all the programs pop up. So the first options here are our 3-year prepayment penalty options, pretty standard for a DSCR. Rates come in today, 7%. Final APR 7.342. Notice this beats conventional and alt doc options, which is absolutely amazing. And for our investors willing to add a 5-year prepayment penalty, we can sweeten the deal even more. Rates as low as 6.75. Final APR comes in at 7.072, which again is much more favorable than the conventional option. And the option here for no prepayment penalty is available for states that don't allow it, as well as for our investors that don't want it. No problem. Rates as low as 7.625. Final APR 7.986, which is just a touch higher than our conventional options. So usually recommend our investors looking for DSCR try to add a prepayment penalty to sweeten the deal. And our final 2 options here are non-QM second mortgage options. So very popular these days, as a lot of customers have a low rate first mortgage and still need some cash out. They don't want to touch their mortgage though, their first mortgage. We can get a second mortgage, 30-year fixed for a primary home. Rates as low as 8.75 to get that cash out. Final APR 9.189. So a great option for our customers that don't want to touch their first mortgage and still get cash out. And obviously these rates are better than a HELOC or adjustable option because it's a fixed rate second mortgage option. And non-QM, you can use bank statements and similar. Same thing with investment properties, 30-year fixed second mortgage, non-QM option for investment, 9.875 rate to get cash out, 10.185 is the final APR there. And again, allows our investors to get cash out without touching their first mortgage, and can also use non-QM docs like bank statements. And let me switch my screen again. And we'll get into today's topic. Oops. We had lost you there for a second. Get in today's topic for HELOC Combo Loans, which is an interesting combination where we can add a HELOC, not a fixed rate second mortgage, which we just presented, an actual HELOC adjustable mortgage to a standard conventional loan, typically in order to attain some goals here. So Jose, let's talk about why we would use this, and then let's check out some live rates.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. The HELOC Combo Loan is a great tool for multiple objectives. First objective is you can use it to eliminate mortgage insurance, right? That's a really good one. So you can get CLTVs up to 95% without paying any mortgage insurance on the first, because your first is going to be capped at 80%. You can also use it to avoid having to use a jumbo loan for the purchase of a property that normally the combined loan amount or the first loan amount would be above the conforming loan limits. So you can use it to avoid having to use a jumbo loan and maintain the CLTV at 95%. That's a great option. And then the third really great tool is you can, and we use this one extensively at the onset of the pandemic. People were crazy looking for options. A lot of alternative funding sources were dried out. You can use it to do a combination loan where you can do a rate and term refi on the first to max it out up to 80% LTV. Combine that with a HELOC up to a 95% CLTV, credit score permitting, of course. So And that option was very popular at the onset of the pandemic when people were just crazily looking for money. So let me share my options with you today. Oh, and I don't know if I mentioned the other option is the condo purchase, real popular in Florida. The condo purchase with limited review, which is our first option that we're sharing here. As you know, in Florida, condo financing is treated differently than in the rest of the United States. In the rest of the U.S., on an agency loan, specifically on a conventional loan, if you have issues with reserves in the association or other financially related matters that would be brought to light by a review of the budget, for example, or a review of specifically asking the question about reserves. Well, in the limited review, you don't have to worry about the budget or the detailed questionnaire. It's a more simplified questionnaire. So we can do the HELOC combo purchase up to 90% CLTV, where it's a 75% LTV first on a primary and second home. No, excuse me, on a primary, and 70% CLTV on an investment property. Agency conventional loans only. So this first example we're sharing here with you today is a 90% CLTV limited review primary, where normally if the borrower were not using the HELOC combo loan, they would have to be shelling out the 25% down payment out of pocket. So in this structure, we only have a 10% out of pocket, 15% is the HELOC, and 75% is the new first mortgage. So here we're at 7.624 is our lowest cost option at par, and you can buy that down to 6.624. And our HELOC rate is 11.25% for the $120,000 HELOC at a monthly payment of $1,125. No mortgage insurance, added benefit there, which is great. And now we have the investment purchase limited review, 7.4. Now we're at a 70% LTV here in the first, so 7.49 is at par at this lower LTV, and you can buy that down to 6.624%. Now, this is one of my favorites. I like calling this one the jumbo killer, right? So this is the one I was talking about. If you're caught in that space in the middle, right, you could almost do a conforming loan alone on the first, but just can't get there. Well, this is a great option here. This example, I set up $1 million purchase price and a $725,000 loan. I set this up for Broward County, Florida, where I believe it's $726,200 is your limit on the conforming loan. And then we add a HELOC of $225,000 at a rate of 11.625. No MI here, 95% CLTV. That's the important point to note. Only 5% down and no MI. 7.624 is your lowest cost option, and you can buy that down to 6.49% for our 95% CLTV jumbo killer HELOC combo purchase. And now our another option here is our PMI eliminator option. So here, what you're essentially doing is you are combining a conventional mortgage with a HELOC to avoid PMI. Same CLTV I'm using here. I'm taking it to the maximum, 95% CLTV. So here we have $120,000 HELOC at 11.625% with a minimum monthly payment of $1,163. And then our lowest cost option on our first mortgage is 7.625 at a cost of half a point. And we can buy that down all the way to 6.875. So depending on the market that you're in, you're going to play around with your loan amounts, making sure that you maximize this and don't go over the conforming loan limits. So here is our 95% CLTV PMI eliminator for a purchase. And our last option here is the refinance structure I was explaining, where you can combine a first mortgage up to 80% LTV and a HELOC up to 95% CLTV, of course, credit score permitting, for a combined CLTV 95%, which is way above the 80% cash out limit. But in this case, what you're doing is you're doing rate and term on the first, which gives you the added benefit of lower cost on the first, lower than a cash out. And then you're taking your cash out from the refinance, assuming that at 80%, of course, your deal was not cash out. Now, this is another good option for, here's a really good one, where if you can't make it at 80% LTV on the cash out, on the rate and term, because there's not enough equity, right? You're just short $3,000, $4,000, $5,000 on the equity. Your loan amount on the first doesn't cover the payoff for the expenses on the first, then the HELOC can come into play as well. That's really where this product shines, where then you can make up the difference to finish paying off that first with the HELOC, and then as well have additional proceeds that you would consider cash out proceeds. So this is really where you can get that borrower unstuck that doesn't have enough equity to even refinance as a rate and term. Well, then you can combine the rate and term with the HELOC, make up the shortage with the HELOC, and still have hopefully additional monies to take it up to a 95% CLTV, which is the maximum. So hope to help you all structure your HELOC combo loans here at the Mortgage Calculator.
Run. I don't see any questions here. Sorry, Kyle's frozen. Anybody has any questions, please drop them in the chat. Otherwise, I think we can wrap it up here. Remember, these are great tools to exceed the limits, LTV limits, or the loan limits. All right, so no questions here. Go ahead and wrap it up. Remember, we'll be back tomorrow, 11 a.m. for another episode of Daily Rates Live.